All right, let's go. Okay, so for those who haven't watched my video today on YouTube, I've talked about Eurodollar and I've talked about all of the ISM non-manufacturing PMIs, as well as the high impact news from USA that it's coming, right? Really like crazy to see how the US dollar index is dropping. Okay, oopsie. It is dropping quite a bit. It's dropping quite far, a lot actually. I would say. Still on the range of an uptrend. Okay, but as soon as it breaks here, then I would say that it's oh, that's a 1 hour chart. Now we got it in 4 hours. There we go. So after it breaks here, I would say that then we starting maybe a downtrend. Okay. So for my opinion, we're continuing on an uptrend. We do have space to come back and continue up to the 105 level over here that I've mentioned it last Tuesday. Okay, so that's pretty much it, what I'm thinking of. But anyways, this is not what the data is suggesting to us, because if we look to yesterday, oh well, actually today, data from midnight 45, 1 a.m., 1:30 a.m. Even though we had some other news just now for Euro here that I will discuss this right now. But oh, it's raining a lot here. But if we stop here and just have a look, like S&P Global Services PMI, right, came as expected. But the composed PMI, it came as 42.1, 0.1% lower than expected. This is fine. Nothing too crazy here, all right, because it's only a number away from what the actual deviation was. Okay, so 52.2, 52.1. This one here, of course, it makes a difference, but it doesn't make that much difference. Now, what it actually had a huge impact was those two big numbers here, okay? Because the ISM non-manufacturing PMI for March was expected to come at 52.8. It came at 51.4. Okay, so that's a big drop right there. And even though it's even worse because it dropped below the previous ones of 52.6. So imagine you coming like that, all right? So we have a chart, and then we have March, January, February, and then March. Okay, and here are the percentage. Oopsie. Okay, so that's the percentage right there. There we go. So imagine you coming on January, you're coming pretty good. February, you're coming good, and then March, you come back everything. So pretty much you are 3 months what you just had run, right? Coming back. So it's not good. It's not good because you're wasting your energy, you're wasting time, pretty much it. So you're coming back all the way where you started doing nothing, okay? So this is pretty much what is happening here. We had all this up move all the way to 52.6 and predicted to be to 52.8.2, higher than the previous, and it came at 51.4. Lower than expected and lower than the previous. Even worse was the crude oil, even worse was the non-manufacturing PMI, non-manufacturing prices for March, because the previous one was at 58.6 and the forecasted was at 58.4. Remembering that this is already 0.2 lower than what it was on the previous. And then it came at 53.4. So that's really, really bad. Okay, that's 1 a.m. in the morning for me. Let's have a look on how these this news had an effect, this data had an effect on the US dollar index. So if we put to the 1 hour here, if we put to the 1 hour, 1 a.m., 1 a.m., there we go, this one here. Let me grab this one. Okay, so this is pretty much what the news made up, what the data made up. So we were on a consolidation, as you guys can see right on the top. And then after the release, we had all of these big drop down. Okay, so not nice for US dollar index, not nice for the currencies that are holding US dollar on the base. So USD JPY didn't have much actually. If we look to, oopsie, loading. If we look to the USD JPY, it didn't have much. Why? I've explained this so many times because JPY is so weak at this moment that whatever thing happens, it's not going to change a penny on the cents of the pair, right? It's different when we get, like, for instance, CHF JPY. Okay, that's a different thing because they've cutted the rates, they've reduced the rates, so it's different story here. Okay, but you guys get it what I mean. Now, going above, we had crude oil inventories that was expected to be negative 300 million, but it came in at positive 3,210,000. Sorry, 300,000. It came in at 3,210,000. If we look to the oil prices, it didn't have much change here. Why? Because this news here, of course, it's really bad. Well, it's bad in a sense. Well, we have more oil, so the price should go down because we have more than something that it's very scarce. So the scarcity, if I'm not wrong, is scarcity, something like that. Sorry, it's not in there because they have so much that they can sell it for cheaper prices. They can't. It's not like a diamond thing, all right, where they only have 5 and they can sell it for huge prices. So the big thing here, why the oil is going up, it's not because of these or not because of these or not because of any of those data's coming. It's because of the tensions happening on Ukraine. As we just had, if we come here and type tensions on Ukraine. Ukraine. Let me do something here that's better. News on, not Ukraine. And Israel. Well, there you go. So 12 hours ago, okay, so still things happening. Gaza ceasefire talks to start as Israel and Hamas dig in. Israel-Hamas war, Biden outbreak. So there's a lot of talking, still a lot of talking on those things, okay? And you guys know that anything that goes in conflict on that area generates a big pressure on oil prices. So if you are a commodity trader and you would like to trade oil, let's say for instance, I would suggest you to always keep an eye on these sort of news, okay? Conflicts, tensions, as well on Canada, right? Canada doesn't involve themselves much into it, but they are a big producer on oil. Therefore, they do hold a big reserve on that, and it occasionates a lot of movements on the price as well when we talk about um, like balance sheet between Canada and, let's say, Russia, right? I don't even know if this balance sheet, like, it's real, but I'm just like figuring out here. So let's say in March they had like $5 million on the balance sheet for plus $5 million on oil sold, all right? And then after a month they had like $1 million. So that's a decrease on the balance sheet. So have it like an EBITDA, all right, EBITDA. So it's pretty interesting when we look to countries as a company, and you can have those same measures, exactly same measures that you have in a company, you can have in a country. It's pretty cool. Okay, so just looking at here, like we can scroll down and down and down and down and down, and you will see that there is continuing talk. Like 1 day ago, 10 hours ago, 14 hours ago, 22 hours ago. What is here? Bodies of 6 AAD workers killed in Israel. So, this was recently. I think everyone knows that. But, it's still lots and lots of things happening in that area. And this is generating a lot of pressure for oil. And when we look to the 4-hour chart here, becoming a little bit more technical here. Yes, it was in a consolidation, right? Yes, it was in a consolidation, but we can't forget to see that it's putting tops, higher tops everywhere, okay, and lower bottoms, okay. So I guess we can see this trend continuing up pretty easy, okay. Where were these had? Well, once we look to when we zoom out a bit here, right, the next area of interest would be somewhere around the area of $90. Okay, if the petrol comes to actual $90, sorry, if the oil comes to actual $90, the petrol will start to cost a lot more. All right, so what I want to show for you guys is, if the petrol comes to $90 per barrel. When was that? That was on September 23. How much was I paying for gas on September 23? I think it was like 220 to 214, I think, something like that. But yeah, so just imagine, right? So right now, I've just went to the gas station now, like a few minutes ago, a few hours ago, and even on Costco, right? Costco is the, like, say, like the cheapest way possible for you to fill it up your car. We've paid $2 for the 98. Out there on Shell, on other flags, other brands of gasoline, 98 is costing you somewhere between 220 to 230 or whatever, like depends where you are. Okay, but here in Sydney, I would say this is quite expensive in a sense, right? And we will keep seeing these prices rising once we hit the $90 on oil prices, once we continue to have those escalations on the Middle East area, and if we do have some tensions on the Red Sea as well. Okay. Yeah, so when it comes to, let's say, like September last year, as we just mentioned here, when the oil prices was at $90 to $93. At that time, people were paying like, where's my pen? Wait just a minute. There we go. People were paying like two 260, no, somewhere around that, I think. Like two, that's to 35 to 40. Okay, let's go for to 35 to 40. So that's oopsie, that's not what I want. There we go. Let me change the color. There we go. I put in white. Okay, so 235 to 40 per liter. That's I'm talking about 98. Okay, so top of the range gasoline. Right now we are paying two already, right? 220. So we can probably see an increase on gasoline prices in the coming months. Okay. Um, okay, where all of this talk, where we wanna go with all of this talk, right? Pretty simple here. Oh, another thing is that it's not in Australia that this will happen. Okay, of course, other countries have different prices, so it can't I can't do a forecast on what's going to be the gasoline prices in other countries because I don't live in there. I don't know the prices in there, but most probably 10 cents. All right, most probably 10 cents up, 15 cents up. The worst case scenario, 20 cents up. Right, we have to always work with three scenarios: the best of the worst, the mid of the worst, and the worst of the worst. Worst of the worst would be 20 cents. Mid of the worst would be 15, and best scenario, but on the worst situation, would be 13. And so between 13 to 20 cents increase on gasoline prices in the coming months, I'm calling it. And this will definitely not be good for lots of reasons, right? Let's say the products on the shelves of the supermarkets, right? They cost a certain amount of price because of a series of working criterias that they there you go. They cost you a series of different prices. Let's do like these. Let's get this one. Okay, so we're having like, I don't know where you guys live, but let's say Australia, you got Coles here. So let's say Coles or Woolies. Coles or Woolies. Okay, so Coles or Woolies. I think Woolies is spelled wrong, but doesn't matter. So you got Coles and Woolies here, right? They're both competitors. Of course, they are both competitors. They do have an interest on each other. Yes, they do. But they're from different brands, sort of thing. But owned by the same trust, if I'm not wrong. Therefore, this is just a metaphor, all right? So just for you to understand how the oil prices and how the gasoline prices would interfere the prices to us in the end. If Coles want to buy something like vegetables or let's say strawberry, right? Coles want to buy strawberry, same as Woolies. Woolies does want to buy strawberries as well. So therefore, they go to the farmers and ask, okay, can you produce 1,000 kilos of strawberries, 1 ton of strawberries by month? Like, oh yeah, I can. This is how much it's going to cost you by kilo. Okay, that sounds fair. Let's lock in an option on that. What is an option? Well, whatever, if the price goes up or down, I'm locking in on that. All right. So Woolies, as a smart guy, he's looking to this as an opportunity because he looks at the gasoline price and the gasoline price is going up. Therefore, they're going to make a contract of option on strawberries. I know this sounds very crazy, but it does happen quite a lot. Like very common on corn industry, livestock industry, farms, all the way to farms and everything. Anyways, so Woolies is a smart guy. He looks to these and thinks, okay, so if I can do an option on strawberry prices for $2 per, $2,000 per kilo, as Coles is buying for $3,000 per kilo, I'm $1,000 lower, and I know that the gasoline price would go up. And with the gasoline price going up, I would have to include these pricing of the strawberry as well on the gasoline for the truck that will come and pick it up the strawberries, the gasoline that will come back, the delivery and all of those things. So all of these have to be into the product pricing. Woolies have a contract set. All right, let's write it down. Where is my pen? Okay, so Woolies have a contract of, Woolies is like that, right? If I'm not wrong, it doesn't matter. Let's say Woolies, whatever. Woolies have a contract on strawberries option contract for $2,000 per kilo. All right. So options contract for $2,000 per kilo. All right. As calls have an option contract on strawberries as well from a different farmer, but he got like $2,800 per kilo. All right. Well, whatever an option basically is, whatever if the price, what's an option? Okay. What is an option? Well, an option basically is doesn't matter if the price goes up or if the price goes down. It just matters what is the locked price of the option. Okay, locked price. So let's say I'm a farmer and I will. It's good for Woolies and it's good for the farmer as well. Locking in a price. Why? Because if the strawberries go down, it doesn't matter. Woolies will have to pay the $2,000 per kilo, as Coles have to pay the $2,800 per kilo. If the price go up, then it's good for Woolies, right? Because it doesn't matter what price it went, he will continue to have to pay the only $2,000 per kilo because he built a contract, an option of the price X amount for that price. So you basically lock it in a price, and you have the option. That's where it comes from. You have the option to buy from that price. Okay, so you have these on like plenty of stocks, plenty of CFDs. Sorry, currencies, and so other things. All right. Did you guys get it? Yes, no, too much.
Yeah, we get it.
Yeah. Okay. Cool. Thank you. What else? Yeah, I think this is it for oil prices. So I'm looking, to oil prices somewhere between close to $90 very soon. Okay, so pretty scary on to stop and think for a bit. That yes, we will be there soon. We will be there soon. All right. Let me take a screenshot of this. If it loads for me, well, it's not. Okay, here we go. Snipping tool. Where is my thing? There we go. Okay. Awesome. All right. So now let me take this all off. If I've took this screenshot, I'm gonna send on the Telegram group so you guys can have it as well. But okay, coming back to to the economic calendar. After that, we had some minor news. We had some Fed polls speaking. Okay, so on this speech here, he did mention some things. Okay, he did mention some interesting things that I didn't watch, of course, live. I had to look on what they were saying later. Okay, but John Paul, he said that he's not. Well, you can also use the Alt Ctrl S key to download the image. Oh, true, right? That's you have the. Oh yeah, true. Forgot that. Yeah. Thank you. So the Fed just say that he's not waiting to cut rates until has more trust on the inflation data. Okay. What did I mention for you guys? What did I mention on Tuesday? I did mention that they would step back, and they just did it. They just did it. All right, they are playing with it. They're playing with it. Where is this thing? Here. So remember, we all were pretty confident. It's US, bro. US, you can't, oh, I can't say a bad word here. You can't, you know what I'm saying? Like you can't lay around. You have to be like, no, sorry. Look, it's 56.55.8. Yet like Tuesday was 56 point something. And it's coming down. All right, July 49, it was 60. So it's coming down. All right. The market is sort of waking up and looking at this and like, okay, yes. Anyways, he stated as well that he doesn't think that inflation is like reversing to the upside, as in a sense of we are having we had three upsides measures, three more than expected measures in the last three measures, so that's 3 out of 3. But he doesn't think that inflation is going up. He just thinks that this is like a pullback on inflation and we will continue to go down. That's what he said. Okay, that's what he said. That's not what I'm saying. So that was most of the things he stated on this speech here. Okay, we did had some minor news for Australia, and then just now we did had some G7 group like France, Germany, sorry, Eurozone, as well as Spain services. The PMIs. Okay, as we can see, it's all green for the Eurozone, not for the UK. It's all green for the Eurozone, as we can look at it and quickly see it. Right, let's just go through some numbers here. CPI on Swiss came lower than expected. All right, expected to be 1.3, came in at 1. Month over month it came at 0, so no inflation on Switzerland month over month. That's a fantastic job, right, done by the Swiss National Bank. Spain services PMI came in at higher than expected, tick higher, 56.1, coming in from the forecast of 55.5. The HCOP Germany services PMI, as well as the composed PMI for March, came in higher than expected. Well, the services PMI came much higher than expected, 50.1 from the 49.8 as expected. And the composed PMI just tick high. But the Eurozone composed PMI is looking fantastically great, as so the services PMI came in at 0.4%, 0.4 higher than expected. So pretty good numbers in general for Eurozone, for the G7 group. And we can see this reflection on euro dollar right here, right? We're having this, we're having this huge move up here, right from yesterday all the way down from 107,200 now to 108,600. Okay, so look, someone asked me yesterday, Tuesday, if we could see the GBP USD come back to those areas of 126, 127, I think someone asked it, right? I can't remember now. He's not here. But well, there you go. It is coming back, slowly coming back. But remember that this is not a strength on the pound. It's a loss of ground on the US dollar, making this possible, right? So that's pretty much what I would say. Just as I want to show you something before I forgot. There we go. This. Okay. Remember that I've just said that Paul stated that he doesn't think that inflation is going up. Well, I don't think so, right? I think this chart is probably upside down and it must be on the other side. But no, forget about this. Inflation is not going up. Like, don't worry. This is all fake. Don't worry about this. No, don't worry about this. As we can see, inflation is going down. Very beautiful. Okay. I mean, come on, guys. Come on. No one is on kindergarten here. Huh? No one is on kindergarten. Anyways, come back here. So as I've mentioned, right, it could, and it did, but very slowly, as I mentioned, slowly, and then up, and then slowly. Now, probably another up leg there. But once we see to these, and if we look to as top to bottom here, we do have potential to come at 27 and hit the 61s on that. But I did mention that euro dollar would be an uptrend for this week, and I was right again. On Tuesday, I've stated that. Now, where could euro dollar go? Right, it's pretty hard to say that euro dollar could come down. All amid those positive data for Europe, G7 group, in a sense, and all of the bad data from US. Right, it's pretty bad. It's pretty hard to look at these and say, well, we can see euro dollar coming all the way down to 107s and again and again. I'd rather suggest that euro dollar could stay between a range of 110 to 17. Okay, that would be my range. Okay, I know it's a very wide range, but in the market we are right now, it is what it's driving. Okay, it is what it's driving. So unfortunately, we don't have much to do in that. Now, what we will gonna have today yet is, let me refresh this page. This is gonna be a big, oh, where is it? That's on my time zone. Canberra, Melbourne, Sydney. Okay. Yes, Amos.
Okay, Santos. So, what you are saying, you mean that the dollar index, that's the DXY. Do you think since the Euro USD is looking in uptrend, I mean, let's say position, do you think the DXN can come below 100? Because I don't think the US or the American people will allow the index to drop down. I don't think they will let the index to drop down below even 100. I think it was trying to happen, I think last month or something, but it didn't happen. And for that, I don't think the dollar can get into recession. So I don't know your idea about this. And
Oh no.
what's happening to the Swiss francs? It is
Mm-hmm.
also giving the opportunity for the dollar, I mean, to get some
Mm.
power.
Mm.
So I don't know. Although the impact that is coming from Eurozone is, I mean, a bit good, but the impact is very low when you check about the news that is coming up and down. But I think it's because of what you said. The dollar now has been weakened because of the news that came. I mean, uh,
Mm-hmm.
some days ago. So I don't
Yes.
know your suggestion about the dollar because well, the GDP, the pound sterling USD, I don't know how far it will rally
Mm-hmm.
because I know what the American people can do. They
Mm-hmm.
can
Yeah.
manipulate
I
anything.
actually, yeah, I actually agree with you almost because I don't think the dollar will lose its strength. In a sense, when we thanks for your participation, really liked it. But like in a sense, it's when we look to the US dollar, I completely agree with you, and I completely think the same way as you thinking. I don't think the US people, let's say, like the USA's American, right? American people would let the US dollar lose its strength to euro or to pound or to yen or whatever. So it's pretty easy to see that there is just a retracement as we just had it like on the last few times here, here, and then another one to be continue to going up. Like even though we had a huge retracement here, but that like when it continue it to going up,
Yeah.
you know.
Yes.
So I do believe, but like we can't as well forget about like okay, if we continue to have those sort of bad data, then that's going to be a problem for US to recover from. But the one thing that Paul is trying to do is doing some torque interventions. What I mean by this is, it's like Bank of Japan loves to do, like they come, they talk a lot, but they don't do anything. And this is pretty much what the Fed is trying to do. In my conception, in my view, when we look to Poe is pretty much like getting snippets from little bits and putting to the media and say like, oh, this and that should happen. And then the opposite comes and happen and the market be happy. And once the market is happy, he comes and say, now we're going to cut rates. The market like, okay, let's move on from US dollar, or let's put more money on US dollar. Well, let's put more money on US dollar because this is the last months, like 3 last months to get the opportunities from US on higher rates, higher yields. And then they come, well, we're going to cut rates. Well, and then even more, we won't cut rates. So even more inflow on US dollar comes in and generates even stronger. And this is exactly what I'm waiting for, to euro dollar to drop again. Okay, so for this week, I mean, it seems pretty hard to see euro dollar dropping like somewhere around here. But if we go to the 1 hour chart, like I always talk about those boxes, right? And there is one right here. I'm waiting for this to drop. That's
Okay.
yeah, that's my take on there.
I think a good sell would be around below 1.07 or something. That would be the good sell.
Below 1.7.
What do you think about that?
You mean
When it all
below
goes or
here?
something like that.
Oh, right. Well, if the trends confirms, if the trends is
Sure.
down, it's always good to follow the trend. But you can have some counter trend trades
Pullback.
as well. Yeah, but I always like, my trading system is to entry on pullbacks. So let's
All right.
say if we count these as a whole trend, we are on a very nice level right now for pullback.
Sure.
Sorry, for a for continuation.
A retracement. That's 61.
Yeah, yeah. Anyways, moving on here to gold. As I've mentioned last week, okay, these would be of 3 targets. So first got hit, second got hit, and third one got hit. And we got the last one here, 2,300. Most probably we will be seeing gold at 2,500 even, okay, like somewhere around here. And it's pretty simple to know why, okay? And I've mentioned that like so many times already. Once we have banks cutting, as well as Swiss National Bank, as just Amos just mentioned, like it is generating more ground to the US dollar as well, because Swiss is a safe haven country, as we all know. Plus, they did had a strong currency. Okay, they did had a strong currency, and right now it's very affected. Okay, so Swiss francs are even losing for the yen, Japanese yen. So if you stop and think like, wow, that's pretty bad, right? Because yen, it's very like bad at the moment, and Swiss franc is losing for the, so it's nothing to worry about, let's say, because everything will come back, but in a sense of years and years and years and years and years. I'm not saying for you to buy it. I'm just saying that this is the natural for of the market. Okay, ups and downs, ups and downs. Now, like when we look to gold, it's exactly the same thing. People think that the US dollar may cut. People think that you may not. Those that think that it will cut, well, they are generating wealth through gold. They're putting the money on gold and going from there. And if we look just this year, right? Let's go for the 1 day chart, for the daily chart. Just this year, 2024, right here, gold have rise 11%. Okay, just in 1 quarter, you could had 11% gain on your investment. So not doing anything on gold. Gold as a safe sort of aspect, in a sense, paying you 11% yielding on 3 months, it's pretty good. And investors comes to these and like, oh, I want to join the party as well. What they do, they put more money. When they put more money, the price continues to go up. Okay, so pretty simple in that scenario. Of course, all the Middle East tension as well, all the same things I've talked about oil can impact gold as well. I feel like today I'm talking a lot about commodities here, but it's a good point because I had a long time I didn't talk about, but nothing was happening, and now we're seeing all of these boomers happening. Okay. I don't talk much about silver. I don't know much about them. TFM. TFM came down, right? Right, those 3 days already of the month, we having like 3% drop or something, if I'm not wrong. Let me see. 6%, 6% drop already on those 3 days of the month. That's pretty solid for Europe. That's really good for them. This makes Euro stronger as well. Okay, we can just let me delete every draw here and add. I've done this like multiple times, but new prices, Kyle. We can see that every time the oil or the gas price goes down, euro dollars go up, euro dollar goes up. Every time the price goes up, euro dollar goes down. Okay, so pretty much it's very good correlation for that. What else? Okay, so just finishing now with these news here that I want to talk about. Initial jobless claims, and tomorrow we have the big boy of the week, NFP. It's going to be right here, non-farmer payroll. Most of the institutions are looking at it to be negative, sorry, not negative, to come lower than expected. Okay. Let's talk about the initial jobless claims first, and then we come to the NFP. When we look to initial jobless claims, last one previous was 210. So they are waiting to have more jobless claims. If we look to the unemployment rate, it came higher. So that means that yes, there is a possibility to come higher than the previous one. Okay, so maybe, yes, we can see 213,000, but maybe we can see more than that. So risks are as expected or higher than expected. And if it comes higher than expected, this is not good for US. Just making sure you guys remember that. Okay. That's all for today we're going to have. Now, moving ahead for tomorrow, we're going to have average hourly earnings, as well as the non-farmer payroll, as well as the unemployment rate. Those are the 3 most important ones. Okay, average hourly earnings, non-farmer payroll, and unemployment rate. Remember what I've always said. Feels like for me that this will come positive, because we're coming from 3 months exactly the same, like positive. I guess nothing has changed on the last 3 months. Okay, nothing has changed on the last 3 months. And this is when I'm talking about gold, or dollar continuation going up. Okay, going up to those levels here. So just watch that, guys. Watch that, because I'm expecting something on those lines. Okay, do you guys have any questions?
Yeah, I think those are the news that I'm even thinking about. If
Yeah,
they can come in positive, because when I actually per the previous news that have been coming from these 3 days, I think if nothing will be manipulated,
no,
that will support the dollar.
yeah. Yeah,
Yeah, that's
I
what I'm
think,
looking for.
yeah, that's what I'm looking for as well. I'm looking for a higher dollar here on those news that we're coming from today and tomorrow. But this will
Before,
reflect a lot last week as well. It will
sure.
ignite the first, but then, first target would be somewhere around 104, 800 on those
Yeah.
boxes here, then next one 105. But yeah, all right, guys. That's all from me today.
All right.
Hopefully everyone enjoyed it. Thanks a lot for your participations, Almus. Hope everyone
Thank you too.
have not a problem. Hope everyone have a um, good weekend, and I see you all on next week. But just remember, next week will be different time. Okay, so different time, 1 hour before what you used to do. So let's say you're doing a 5, now it's going to be a 4. Okay. All right, guys. See you next week. Bye bye.